Hey Henry. Okay, cool. Yeah, so I completely understand exactly what you mean. I think not just yourself, myself, and quite a few different traders in Falcon I spoke to um, have been through the same thing. I don't face it as much anymore, but sometimes, yeah, it does become a mistrade because of the lack of preparation on our side. Sometimes you can actually do everything right and still miss a position, which I think is one of the most painful things that a trader can experience is mistrades. But then at the same time, it's always lovely to see how beautiful it plays out, and yeah, I mean, it's got its ups and downs. Yeah, just going to make this quite short and simple. So I do apologize if I waffle on a little bit. So essentially, let's just say that we'll take this price in for what it is, okay? Let's just say that this was a high value area over here, so it's the point of interest, and then we had a push down and a push up, right? This is exactly what we're looking for with the impulsive approach. We're looking for a push up and a flag. Now, we got a push up. There was a flag in here, but let's say that we didn't take it because it was still within that corrective price there, and we wanted to see it break this line in the sand. Okay, cool. So um, you probably had your entry criteria, everything anyway. So you completely know that. And then let's just say that now we are looking for a push up and a flag. At this point here is when I would probably have my calculator out and ready. Probably wouldn't have to do position sizing like this. I like to do it just because I have a bit of time on my hands and I like to be a little bit extra. But not everyone needs to do something like that. It's not in everyone's want. So let's just say that now we're looking for a flag. So I look into the criteria in my trading plan for my flag. My flag criteria is two tops, two bottoms, and the amount of the amount of candles depending on the flag, and then I evaluate if how I want to take the entry on the flag, depending on the flag and the area. So everybody's entry is slightly different, but near enough the same. But let's say, okay, cool, we have two bottoms, which is a part of my entry criteria, and then it's not valid until I have two tops. So the odds are, because this is going to be two bottoms, two tops, and we've touched the bottoms before the tops, and we're going to be an impulsive leg, we could just impulse through this. So then I have to evaluate, am I going to take a reduced risk entry? Which, okay, makes sense. I would have already started sizing up my position size. It would have been 54, 55 pips, let's say, covering myself ever so much just in case we do tap back into that override for a three touch. I could be tagged out as well. So 54 pips is quite a lot. And then I have to evaluate, if would there be enough room for me to protect myself? Well, because of this big impulsive candle, I think, yeah, there would be more than enough room to protect myself if this played out. So this would be one set of criteria for my trade, and then I can set a pending order for this and leave it. However, because the two bottoms, two tops isn't set, I can't take the trade yet. So I would have that ready, but I wouldn't take the entry. Why? Because obviously it has to meet the criteria of my trade. So I've planned that one already. Okay. Now let's say we've got the two tops. Brilliant. Okay. And then within this candle, this is where the planning and preparation comes in for your actual entry that you would have missed. So let's say that I go into the 5 minute, not that we would on live charts, but just to get granular. So we're kind of more in the moment of time. Um, so from the moment we tapped into that second touch at the top, we had our two bottoms. Now our second top, I would have then seeing how much time. I think it was roughly around about 35 minutes. Yeah, 35 minutes. So between the top touch and where price closed on the 1 hour, there was 35 minutes. So within those 35 minutes, that's when you could have, been preparing yourself for the trade. So we know that price was fluctuating in that zone there. So we'll take another position calculator, long position, and then just size up. So that would have been roughly around about 30, 40 pips. So compared to the 50 pip reduced risk, if I wanted to take a risk entry within there, then there's an option. But because of where it is positioned, the reduced risk would be more in favor for myself personally. But then in that preparation time, we would have waited for the hourly close. So the hourly close would have been roughly around about here. At this point here, between okay, so yeah, at 7:50, and then we're looking at 8 o'clock for the close, we would have had the preparation. So we can see that price is basically sitting in this zone here. So I would have taken the sort of price where it was, and I would have planned, and I would have said, okay, cool. So I'm looking at roughly around about, okay, let's call it 35. Well, for myself, I would have already had 35 planned for one lot, but let's say you didn't, you have 10 minutes in that sense to plan for 35 pips. So if you wanted to squeeze it a little bit tighter and go from, the overrun and just under it, you could have said 28, whatever, 30. Myself, I would have done 35 and then left it in there. So I know that I can enter that. Now, I would have done that because of the pure basis, I have my criteria for my trade. I have my two bottoms, I have my two tops, I have a middle section in there as well. There's more than enough for me to say I'm happy to take this trade. In that sense. So I would have then essentially waited, and then as we were approaching the close, so let's just say that price was here and we were about to go to the close, opposed to me just tapping it in right at that 8 hour, I would have then had a clock on my computer, or you could have a clock out on your desk, which basically has a countdown timer, which is in sequence, or you would have looked at your clock down here, which is a little bit more accurate, and then you would have seen that you're approaching 10 seconds to it. You could have just entered the position. You're more than enough protected. It doesn't matter even if you entered it a minute or 2 minutes earlier. Why? Because you're comfortable at that point and you've made the informative decision, business decision, that you want to take an entry here and you've protected yourself, right? Because it's all about the protection at that point, and you've protected yourself from this sort of 1, 2, 3, and then you've got your two tops and your two bottoms, and the validity of the amount of candles on your hourly or 15 minute. So, there's enough criteria for you to not even consider why having to wait for that 8 hour close, for that 8 o'clock close. You could have literally just jumped on the trade when price was here because it's a cheaper price to what you needed, and it's in a better zone because it's kind of more so over here, and then you had the reduced risk in case you did miss it for any particular reason. So then we jump to the 1 hour and then we play that out, and then behold, we just spike up. So the odds are this could have come back down, tapped in over there, but you would have been protected regardless, and then you would have just said, well, okay, maybe I should have been a little bit more patient, or well, actually, in fact, I did have enough validity. I had two tops, two bottoms. I back tested this 100 times. I'm more than happy to take a position like this, so I accept the risks involved and I'll take that entry. If I wasn't happy to take that entry, I would have had to take the reduced risk entry because I wasn't comfortable with this because I didn't have enough confidence because I didn't back test it enough. That's the way I would see it personally. But even so, you took either both, and then you play that out. Yeah, you would have had more than enough room to manage that position. That would have been running about 1.5. This one, it's not really about the percentage at this point, but it's just more so about the thought process. And I think mentally, you would have been a lot more comfortable planning it in that way, because what I tend to used to find was if I would wait for that 8 hour close and that went, I would be like, I'm too late. But really and truly, that's not even too late, because during that period there was probably more than enough time. Um, if we actually look at it from the 8 o'clock, so from here, yeah, so 15 minutes it was there, and then it pushed up again, and then but because we're looking for perfection sometimes, we feel like, okay, cool, we missed out on it, but there is still more than enough time. And then especially when price just comes back down into that area where you would have entered anyway, when you look at the validity of it, that's still more valid area for you to enter in the trade and scale in. So yeah, so at the end of the day, it kind of comes down to psychology. It's really about the mindset of how you view it, because at the end of the day, I can stare at a position all day, and then the position kind of just does this and goes. Well, at the end of the day, I wasn't wrong. It just means that I didn't see the two tops, two bottoms, the validity of it, and I didn't get involved when I should have. I had more than enough opportunity to get involved in this area here, and now price is up here. Well, and now I just have to wait for something a little bit more. That's all it is. But then there'll be hundreds of other trades, and then you take that lesson and you now apply it to 100 other trades. You're the best trader you can ever think of. So basically, that's basically the way I'd look at it. I do apologize if I waffled on a bit, but I hope that was helpful. So yeah, in terms of timing, if the validity is there, there's no better time to get involved than whenever you feel most confident and comfortable. That's the way I see it. But perhaps maybe someone else might have some better advice upon that.